On today's episode of the AI Investor Podcast from 24/7 Wall Street, we jump into recent AI headlines and deep dive into the big opportunity in front of optical stocks. All of that is next. Welcome back to the show. I am David Hanson, joined by Eric Bleeker. Eric, we've got a good show today, a little unusual show. We've got a great interview that you did with Austin Bohlig, who runs the Substack Industrial Tech Stock Analyst. So we're going to share that with the audience today. But before we get to that interview, I did want to jump into some recent news that's happened over the last 2 weeks. There's always something going on in this AI space. So I wanted to get your reaction on just a couple things. So market in general, we had the big NVIDIA event that we kind of teased a little bit last show. There's been a big IPO in the headlines. So where do you want to jump in on kind of just these news headlines that we want to touch real quickly?
David, I think right now in the current environment, we almost always need to start with what's happened in the general market the past 2 weeks. So let's start there.
Sure. I mean, we've had a little bit of a bounce off the lows, and then the last 2 weeks we've kind of come back from that bounce, and now we're back into we're back near the lows on a lot of these AI focused stocks. NASDAQ in general has kind of struggled to bounce back. We're not getting that immediate V-shaped recovery that we've maybe sometimes grown accustomed to in some of these drawdowns. So where is your mindset? Is it just stocks have re-rated and we're just sitting here waiting for a larger catalyst, more information on, we talked previous episodes, hey, it's just going to come down to, is there a recession or not? So what do you think is kind of pulling us back down to these levels that we're at now?
Yeah, and I think we talked about last week on recession versus other factors that are specific to the AI industry. We are seeing some risk-off selling at the tail end of this week. As you had noted, last Friday and Monday, we saw pretty significant days of rebounds. Past few days, and we're filming this on March 28th, there's been pretty significant risk-off selling activity. But there have been some kind of very AI-specific storylines. So I'll break a few of those down. Number one, we saw a lot of selling pressure after Alibaba's CEO went from an event essentially and said that he thought AI was in some form of bubble. When I saw this news, I was wondering why the market was reacting so strongly to it, because the same news had happened last week. Well, it turns out the news last week was Tencent's CEO at another conference saying exactly the same thing. Now, here's what's important about this story. All third-party data out recently has been China has been essentially loading up on an outsized number of chips post DeepSeek. Remember, after DeepSeek attracted significant attention, there's been funding programs from China itself. There's a lot of incentives for these companies to go out. Most of them have increased their capital expenditures. We saw AMD rising in the past couple of weeks on reports that they're getting a large number of orders out of China. So you always have to remember the concept of what is, David, what would you call it? Talking your book, or, the position of strength.
Yeah.
And within China, they have to order export compliant GPUs. So as much as it completely behooves, it's in their benefit for Chinese companies to constantly talk down capital expenditure spend, because if there is a perception that there's a bubble and American companies need to slow down their buying, it is the single biggest factor that they are at a competitive disadvantage. So it's always a little interesting to me when you have these very, negative accounts. You could think of like a zero hedge, something that's permanently negative. They are disbelieving of every single thing. But then when something from China comes out about AI demand, it's, it must be true, right? And this is just part of the negative cycle right now. Another big news event was Cowen, which is one of the, it's a Wall Street researcher. They had caused a major sell-off in the AI market. It was maybe a month ago, saying that Microsoft was stepping away from some demand. We've talked about this in prior podcasts. Specifically, it makes sense that Microsoft is stepping away, and it is within consensus numbers for expectations this year. They said they're stepping away from up to 2 gigawatts of data centers, which is a very large number. Now, there's a major sell-off on this headline, but when you go and actually read the report, they said, number one, Google is taking the international demand, Meta is taking the US demand, and they notice there's significant incremental demand from OpenAI due to their Stargate initiative. Now, once again, David, what have we talked about? Well, Microsoft's scaling back ambitions because their major partner, OpenAI, is partnered with Oracle and other companies on Stargate. So again, this is news that broadly fits within consensus, but the headline's bad. And as we've noted right now, the sentiment is to shoot first, ask questions later. So when a bad headline hits, that often isn't actually bad for the industry. It further washes out demand. So, David, it is always We are not afraid on this podcast to change our opinions. We're not afraid to say that we're wrong. But I think it is also worth double clicking into every storyline. And while I think a lot of, the sell-offs in the market right now can become self-perpetuating if we are in a risk-off environment, I can see hyperscalers reducing their plans. To date, I haven't really seen anything of note that indicates we are going well beyond or well below, I should say, consensus for 2026. And beyond that, we've had kind of a crazy week in AI. So let's cover the actual news and what's happening with AI, because it has been absolutely bonkers out there.
Yeah, I mean, I think you make a good point about the headlines can be misconstrued, which we've seen that people are hungry to find some angle and run with it. And we also have to remember these companies, they might also be playing a little bit of a game here. You can't take everything they're saying at face value. We're talking about hundreds of billions of dollars, huge stakes in this industry. You can't just expect that everyone's going to telegraph their game plan exactly. So it's a little bit difficult to weave through the news because you can't fully listen to everything the company's saying. You can't fully listen to the headlines. So you really do have to dive in. And in some cases, wait to see what the actual numbers are versus just, oh, we heard this quote and this is what it means for the future. So we will try to bring that to the show, to bring some sobriety, to try to weave through and understand the headlines, but no guarantees we're going to get it perfect. But it's not as simple as I think as many people often make it out to be. But let's get into some of those developments. A lot of things, if anyone's been on X or Twitter over the past week, it's all about image generation. Has there been some sort of breakthrough here? Everything that I'm seeing on my computer is about, hey, look at this image. I made it in sort of the anime style. So what is going on here? Is it a big deal, or is this just another kind of parlor trick for AI?
I honestly think this is the biggest consumer-facing event for AI since the launch of ChatGPT. And the news is that OpenAI, they made a major update to their 4.0 model, which isn't even their most cutting-edge model, but they incorporate new image generation into it using new techniques. And essentially what it does is it's very good at following creativity. So what you could do, this is, I believe, in their free tier, limited to 3 per day. If anyone wants to try it, you go to ChatGPT. And the big thing on a Twitter is you take a picture of your kids or your family or your dog, and you say, make this in, what is it, Gilby? It's the Japanese anime style, which I'm not an anime fan, so I might be mispronouncing. Apologies to any big fans out there. And this is taken over, specifically X, but a lot of social media. And what OpenAI has said is essentially, hey, our servers are melting right now. And if you go and try this, you actually might see your image half generate because they are struggling. And when people have asked Sam Altman, who's the CEO of OpenAI, hey, what's going on? Why aren't you able to roll this out more? He has openly responded, we are in a GPU shortage right now, which is consistent with them going out and making plans for Stargate. Now, OpenAI this week, the reports are that they are about to close on a $40 billion funding round. If you have any familiarity with the VC space, you are aware how insane a $40 billion funding round is. This is completely uncharted territory. Granted, it is coming from an insane person in the founder of SoftBank, Masa. But this puts OpenAI at $300 billion valuation. Beyond OpenAI, we also have Google talking about rate limiting their models after an explosion in demand after they released Gemini 2.5. Gemini 2.5 puts Google back in the lead and leaderboards, scoring how good AI models are around coding, science, mathematics, understanding large contexts. So it just kind of shows that the battle we're in right now, that every single competitor is leapfrogging each other on a monthly basis. Within this battle, the expectation, the long term, is we're going to see some people over time probably fall out of this battle. But what we have seen the past couple of weeks is exactly the value of OpenAI, that they are winning on the consumer front. One point is, you've seen a lot of consumer-facing business models. If you get everyone on your platform, you do that early stages, it's very hard to lose that lead. It's what we saw with Google in search, what we saw with Apple in a lot of places in smartphones. So, OpenAI, this is a significant event. And once again, it's just driving incredible demands for compute in these consumer areas before we even get into the real use cases we've been the most excited about, like agents in a lot of enterprise products, which we believe will really start picking up steam in the latter half of the year.
Yeah, the image stuff, again, if you haven't seen it, go online, search around. It's pretty incredible. You messaged me yesterday. You're like, man, Adobe's just got to be really nervous here to the amount of work that you can do with very low cost AI or free. And, you pull up Adobe's stock chart, it is in a almost 50% drawdown from its all-time high. So, it's not this happens tomorrow, but maybe the market is saying, hey, this is a large business that is maybe slowly being disrupted by this technology here.
Well, I know this is an audio. It's a podcast, so you're going to have to visualize this for a moment. But the big thing was a lot of these image models, they struggled with things like text sense. How many years will it take? These new image models are almost perfect with a lot of text. You can tell it to create an infographic. It's astounding how good the text looks, but also the logic that it uses. One other thing that I had sent you specifically, David, was a markup where someone took a photo and just wrote, add some space back here, add text here, make this person on the moon right here. And they basically just quickly marked up, and the OpenAI 4.0 with ImageGen followed it perfectly. And you go, oh, we went from so far away from the use case of Photoshop, of needing to actually make all those small changes, to something that has the capabilities and you're just lacking the UI to really catch up in a really quick way. So I just need everyone out there to imagine, as we keep going on models, that's just these markets that felt like they were defensible for years. Often that gap can close within an instant. And that is what excites us looking at a lot of these markets like agents in the latter half of the year, that it feels very far away and then it suddenly feels right in front of you and addressable in a shockingly small amount of time, right?
Yeah, I know you've made the comparison in the past that for hundreds of years the cost per written word was fairly consistent and it cost money, and then suddenly overnight with ChatGPT it pretty much dropped to zero, and you can kind of see a similar for that type of job of photo editor or photo creation. That took a person. Someone had to sit down and do Photoshop and learn a skill, and even the most skilled person, I'm sure that would take 30 minutes to an hour. Now it could be done in 15 seconds. So certainly impressive there. So I do want to get to the interview quickly. I wanted to hit quickly on the NVIDIA event and then also the CoreWeave IPO. Just any quick thoughts on those events that are happening / have happened in the last couple of weeks?
Yeah, as you know, we want to get to the interview. So I'll make this fast. CoreWeave, it's not something that we're going to be investing in. This is a real company. It's cloud computing, but specialized in GPUs instead of, the traditional data centers. We're just approaching this market. We've made the investment in Amazon. We think that the leaders are going to really excel over time. CoreWeave is a very high risk way to play this market that we won't be investing in. I'm surprised this IPO is even happening. It's terrible market sentiment. It seems like demand has been rapidly pulled. It feels like it's going to be a negative overhang on the entire industry. So I'm most baffled in why this IPO is even kind of proceeding at this point. Second, NVIDIA GTC. We said we were going to talk about, but I think one of the big things about GTC is it didn't really present much of a narrative shift. NVIDIA is trying to point to a future where we are beyond just kind of this data center build out and where we have AI factories from companies and robotics. I think this is going to take time for the company to really explain. After GTC, the CEO of NVIDIA, Jensen Huang, he had a Q&A with the analyst community. He almost seemed frustrated that people aren't following the narrative. So it's going to be on NVIDIA if they feel like they are now attached to kind of this fear in the market of this data center hiccup and that putting kind of a limit on their stock. They're going to need to do a better job of telling their story over the long run. But one other thing from GTC was NVIDIA spent a long time talking about this battle of them versus custom chips. We've talked about Marvell and Broadcom. Specifically, I think they were targeting Broadcom. On one hand, it shows NVIDIA's very aware of this opportunity. On the other hand, I think it kind of validates what Broadcom's doing, that NVIDIA spent so much time essentially reacting to that threat. One final point, NVIDIA's product roadmap, as always, incredibly ambitious. I think it's incredibly long-term optimistic for a company like Vertiv, which is, of course, down 25% in the past few days, despite generally optimistic news. So, that's, David, that's the way the market is right now. But GTC, I think the one sentence on it is that I think NVIDIA has some work to do on continuing to create this narrative on what the future looks like. Because if they believe it's different than what Wall Street's ingesting right now, there's a significant gap that's emerged.
All right, sounds great. All right, let's get to the interview again. This is with Austin Bohlig. I thought it was a great interview. You guys talked about the optical networking space, which we have some companies in the portfolio, Fabrinet, Lumentum. Now, people listening might hear like optical interview on optical networking. This is going to be, it really was not boring, as you are much more technical and in the weeds than I am. You're probably like an 8.5. I'm like a 2. And I really found this interview to be enjoying listening to Austin's point of view. And he's technical, but he explains it in a really great way. So any other quick thoughts before we kick over the interview with Austin?
Yeah, I think it's just the optical plays companies. If you've invested in any stocks, Fabrinet, Lumentum, what else do we have? Coherent, Ciena would be another one. Mm-hmm. It's just, we've talked about these being a little high risk. It's very levered to this AI build out, but high upside. A lot of these stocks are down. So I know if people have these in your portfolio, it's a time that's a little bit more nervous. So I wanted to go out, find an expert who specializes in this space to be able to talk if there's something we've missed or if he sees opportunity as well. I think if you listen to this, you're going to get a lot more confidence and understanding of the space. You summed up well, David. He even makes some Harry Potter references if you're afraid of it being too in the weeds. So it's a good talk. I hope everyone enjoys. Hey, everybody. I'm really excited to have Austin Bohlig on the podcast today. He is an expert in optical networking, recently starting a blog in the space, which I'll let him share more details on. So Austin, number one, I'm glad to have you on. I think this is a space that a lot of listeners have gotten excited about because of some of the growth opportunities, but it's also deeply technical. So we just really appreciate you spending some time with us today.
Yeah, thank you so much for having me. I agree, optical networking is a very technical space. Hopefully our discussion, we're going to keep it more higher level for the generalists out there. But as I'll kind of talk to, I do publish some research where I try and put it in layman's terms as well. But yeah, so brief background on myself. So I spent the last 10 years in different various Wall Street related roles. Started out as a sell side analyst covering small cap, next generation stocks for everything from robotics, drones, optical networking, additive manufacturing. Then I spent some time working at a venture capitalist, investing in those similar type of industries. And then most recently, I actually was head of IR for a publicly traded additive manufacturing company. But over those last 10 years, equity research is a true passion of mine. And so like you said, about a year ago, I launched my own publication. It's labeled the Industrial Tech Stock Analyst. And right now I'm just on Substack. But what we do is we take a very sell-side approach where we cover a handful of companies within these fast-growing industries, such as robotics, drones, industrial IoT, optical networking, where we conduct our own channel checks, issue earnings previews to give our readers a little bit of a read on how the quarter may come, as well as do summaries after the earnings, as well as do deeper investment theses on these companies and to highlight who our top picks are. And we also love to do industry deep dives. That's probably my favorite. And as I kind of said earlier, we did do an industry deep dive on the optical networking space to help our readers kind of get a better understand of how this technology works and who the key players are.
Yeah, and we will drop, if you're listening to this on our podcast or YouTube, we're going to drop a link to that deep dive in the description. I really encourage everyone to check out. First of all, you've got a lot of free content on your page, but I'm a paid subscriber. I love the content I get here. So I just wanted to put this out there for everyone that I have subscribed. This your service has my endorsement. If you're investing in the space, I think it's a great resource. So Austin, let's first of all talk about just the 10,000 foot overview. There's been a lot of interest in the optic space within the AI portfolio. We've recommended or we've purchased on these companies. I just wanted to get your take from the highest level. What is the opportunity here, and why is optics suddenly an area that people are so interested in with the kind of growth of AI?
So from a fundamental perspective, optical networking is the transmission of data through light. Optical networking isn't new. It wasn't invented last year. It's been around for years. But historically, in these data centers or another type of high compute systems, the legacy type of method would be using copper fibers and transmitting data over electricity. But what the biggest flaw with that is it's limited with bandwidth and speed and distance where data can travel. And as we've evolved in technology from social media, YouTube, the amount of data we are now consuming has grown exponentially, which has driven the need for new technologies that can transport data, common optical networking. And the best way to think about the optical networking space, there's so many players and there's so many different subsegments within, but we like to group it into three different segments. You have your optical component players, which is your Fabrinets, your Coherents, your Lumentums. Think about you're making a cake. They're the ones that are selling the ingredients, the eggs, the milk, the flour. You then have your optical system providers. Those are your Cisco's, Cienas, where they are buying the components and making the systems that then the end customers, which is the third category, buy and use. And when you're thinking about the end customer in the optical networking space, you want to split it into two categories. You have datacom and telecom. And when you're listening to these optical networks earnings calls or reading about them, those are very common terms you're going to see. Datacom is easy to remember because it's data centers. These are the hyperscalers, the Oracles, the Amazons, the Metas that use optical networking within their own data centers and expanding that out. Telecom is like your tier one telco provider. So your Verizons, your AT&Ts, your T-Mobiles, who are also sending large data or large amounts of data across longer networks and stuff. And so for us, that's the best way to think about it, those three buckets. I think for us today, I think we're going to focus more on the optical component players because that's a really fun opportunity. As we'll kind of get to, I like to put a big caution sign on this because optical component stocks, I say they are great to trade. Most of them aren't great to own for the next 10 years with a lot of great companies. If you are a long-term investor and like to invest in something and not look at your portfolio for a year, these stocks might not be for you. But if you're a little bit more active, I think there's a lot of near-term upside opportunity.
Well, go ahead.
Yeah, and as I was saying, getting to your point of why am I so bullish about the optical networking space? Well, it's really driven by AI. Nothing new, but the amount of data these AI data centers need to compute is unheard of, unbelievable, which is in turn driving demand for higher compute optical components. And something that we'll talk about here is when you think about optical components, they're characterized into the amount of gigabits they can transfer. So it's very common to hear about 100G, 400G, 800G, 1.6T or terabits. That just refers to, for example, 100G is 100 gigabits of data per second. 400G would be 4x the 100G. So as we're having this discussion, I'm going to be talking about 100G, 400G, and 800G and why it's important. But for us, the reason why, though, this AI infrastructure build out is in place is for the last year, we've been talking about the massive CapEx investments the hyperscalers are making. That's what's really been driving this cycle on the Datacom side of it. Last year, I think CapEx just from the 5 hyperscalers, Microsoft, Amazon, Meta, Oracle, and I'm missing one right there.
Meta?
Yes, Meta, I believe, was up 50% to $250 billion. They all guided this year to that to be up another 50% accumulatively. And so that trend is what's a big bullish signal for us, which we continue to happen. We're going to get to this later, but last week, GTC, which is the biggest AI event of the year that NVIDIA hosts, where Jensen Huang highlighted that he thinks that CapEx for the enterprise IT could grow to 1 trillion, where right now it's at about that 300 billion a year, 1 trillion by the end of the decade. So he doesn't think this is slowing anytime soon.
So let's maybe double click for a second. You mentioned pulling up the caution sign. I know anyone who owns these stocks is feeling that right now, right? Because despite that good news that you've been talking about, that hyperscalers are generally, it's been nothing but taking up expectations from where consensus was 4 or 5 months ago. Many of these stocks are down 30 to 50% in the optics space. So I just wanted to maybe get your take on where we stand right now with a lot of these stocks selling off. Do you see this as a particular time of opportunity, or have you gotten a little bit more cautious in recent months?
No, I think this is definitely opportunity. Just to give some background. So I think there was kind of 2 big things of why we saw this weakness. One was the DeepSeek news that came out. Early January, DeepSeek introduced this model where they were making these claims that they were able to build this on very little amount of infrastructure. Now, why did that impact the optical component stocks? Well, if this company in China could build this, why are Amazon, Meta, and the hyperscalers spending hundreds of billions of dollars? So there was a fear that when the companies came out and provided guidance for the year, because earnings season hasn't kicked off yet, they were going to temper down their CapEx estimates and forecasts. That ended up didn't happening. I think those fears have eased where all the companies reiterated their aggressive CapEx plans. I think you also, though, had the risk off trade where hopefully now we might be rebounding a little bit, but that definitely coupled with it. I do think, though, if you look at valuations of the optical component stocks, they did get a little bit rich given they're cyclical. Typically on these up cycles, I feel that the appropriate valuation is trading mid, maybe high teens earnings multiples, I think is appropriate. And what's great about these stocks is during these earnings cycles, they see great operating leverage. So there's a lot of earnings power, which can drive these stocks higher. But you look back and I was doing this before the call, a lot of these stocks were trading 25, almost 30 times earnings. And I just think things got a little rich. Right now, they're trading mid, sometimes some low teens multiples. So I think the risk rewards definitely a lot more favorable for some of these names.
Yeah, in our last podcast, we did walk through many of the valuation multiples you're talking about. If anyone wants to go back and listen to that, I was curious. You've mentioned kind of cyclicality being the name of the game. That if you're wanting to hold these stocks for 10 years, it can be a bumpy ride, but often you're able to work through cycles in terms of optical demand. So where do you think we are in terms of kind of this? If we made this a baseball analogy and you want to say top of the third, bottom of the sixth, where do you see us in the current AI kind of investment cycle?
Yeah, so I don't think we're at the seventh inning stretch yet. I think we're not even, I would say probably third or fourth inning, because this is going to be, we're going to go through cycles, but there's so many opportunities throughout this. Meaning right now we're at kind of the back end AI infrastructure where the data centers are being built out. I still think there's a lot of compute that needs to go in there. So I think that's going to drive some demand. But you got to remember too, that these companies need to make money. And in order for the Amazons, Metas of the world to make money from these data centers, they need end customers, enterprises to adopt this. And in order for them to adopt this, all the businesses out there are going to need to upgrade their infrastructure to support this higher bandwidth AI. So maybe as the back-end data center slows, we think then kind of the client-facing enterprise business may pick up, which these optical component companies supply to. And I do think here there are some shiftings within the market that I think are going to be more bullish for US-based optical component companies, which Fabrinet, Lumentum, Coherent, and I would even include Applied Opto, AAOI, where under a Trump administration, it sounds like sourcing locally is what a lot of these companies are wanting to do or kind of being pushed to do, because the biggest optical component suppliers are actually based in China. But if they stop buying from China, that creates a massive opportunity here locally. And I think that kind of shift in market share is going to provide kind of a catalyst as well. And we saw some insights of that last week where Amazon, it's very common practice for Amazon when they get into long-term partnerships, they like to get into warrant exchanges. Not going to dive into that, but essentially it's a way for Amazon to get a discount on the products. But as a result of doing that, it typically means long-term partnerships for the suppliers. And both Fabrinet and Applied Opto, AAOI, announced these warrants agreements, which signals to me that Amazon is looking to source maybe more locally for kind of these next-gen optical components.
And I do want to double click on what you're talking about a little bit more there. But first, maybe for people in the audience too, as you're talking about the cycle and the opportunity, could you maybe just share, I know I'm putting you on the spot here for specific numbers, but what kind of market size are we looking at? Because it's always interesting for people, where are we going in terms of a starting point to where we might be, because people are looking at growth rates for the industry, and also are we growing in line with AI infrastructure, or is optics actually going to grow at a faster rate than we're seeing for hyperscaler spend?
Yeah, it's a great question. It's hard to put specific numbers, but I think if you look at some of the optical component numbers, they're growing 50% plus, which is in line with what the hyperscalers kind of CapEx number is. And so I would expect that to continue. Now, going back to the point that I made, that because all these hyperscalers source from multiple suppliers, they're typically not just sole sourcing, but if you're taking out these Chinese suppliers, not saying that they're not buying from them anymore, but if a bigger share of the pie is going to this, I do think there is an opportunity that we can maybe see some faster growth from the optical components. And trying to size it, I don't want to keep going back to the same type of thesis, but these hyperscalers, $350 billion in CapEx this year. I don't think that growth rate is going to continue. I don't think we grow 50% next year, but I think we could grow next year. And so we're talking definitely 15-20% kind of. I would feel comfortable as kind of like a CAGR for the next couple of years, on top of kind of this big uptick right now. And so, yeah. And I think too, which is a great sign of this, is all these optical companies I did an earnings takeaway. And one thing that was my biggest takeaway is all these optical component companies are now doing massive CapEx, their own capital expenditures, capacity increases, where AOI announced the biggest CapEx in history last quarter. Fabrinet's looking to double their basically revenue footprint. Now, that's kind of the flip side of these optical stocks. And that's why I put the caution sign up there, is because in these up cycles, you get great operating leverage from gross margin, pricing, etc. But demand one day will fall off a cliff and no one's going to see it coming. It's very, very hard to predict. And when that happens, you kind of get a double negative where you get the lower revenue, but then you have all of this built up capacity that's underutilized. So your gross margins take a big hit. And so that's kind of the real risk of owning these optical stocks.
Yeah, and let's maybe talk about the industry dynamics that you've started talking about a lot of benefits where we're seeing actual concrete examples where companies based in the US, often with production outside China, have been seeing very large kind of wins with companies like Amazon. Now, there's also some areas like NVIDIA just announced co-packaged optics at GTC, which is getting a lot of news. And then I know in your blog, you've talked a lot about an unbundling where, a lot of demand for the industry used to be driven through NVIDIA, but now a lot of these hyperscalers are going kind of direct to these optics companies. So I know that's a lot of topics, but this is also, some areas with some kind of forces that co-packaged optics could be pressure for some companies, but some of these other factors like the urge to buy from American companies and also diversifying kind of a customer base are positive. So could you sort out kind of how all these big themes work for the main players in the industry?
Yes, will do. And let me touch on NVIDIA first, because that's kind of a transition or an easier transition of just talking about with these companies sourcing locally. NVIDIA, I'm sure every single one of your listeners knows who NVIDIA is. They have historically been a massive buyer of these optical components, because what NVIDIA was doing is they were buying these components and building these massive racks, basically building whole platforms, which then the hyperscalers would buy. Well, Google, Amazon, Facebook, they have very smart technical people in-house, and they might not want to buy everything like holistically from NVIDIA. They might want to kind of tweak certain things because they think they can do it better. And they're also paying more because if they buy the optical components, if NVIDIA buys the optical components from these things and put it into their system, they're going to upcharge on that. So it's a more expensive system. Where we see this trend, what's happening is called debundling, where they're still buying, these hyperscalers are still using NVIDIA and buying their GPUs and their NLV72 racks like hotcakes, but they're buying them without the optics incorporated because it's a little bit cheaper. And what we think they're doing is then they are going directly to the optical component suppliers and going to be buying them directly and integrating them themselves. And so what we think it does, it's just creating a bigger market opportunities for these suppliers, because what you'll hear common on these earnings calls is it's not as easy as Amazon calling up Lumentum and saying, hey, can you ship us some 800G transceivers? There's a qualification process. So what you're hearing a lot right now on these earnings calls is a lot of these component suppliers have already been qualified with hyperscalers, or they're in the qualification process. The ones that have been qualified, then they can start buying in volume. And so we think this debundling on the optical side from NVIDIA is going to allow these component suppliers to maybe get new hyperscale customers, which is a massive revenue opportunity. And we think these US-based hyperscalers are probably going to source local, which we're seeing from already with the Fabrinet and AOI Amazon deal. Mm-hmm. So now co-package optics, transitioning to that. Don't want to nerd out, but if you've got any Harry Potter fans here, it's a co-package optics, also CPO is the acronym, could be like the word Voldemort. You don't want to speak his name on the for a lot of the optical transceivers because it's very, very disruptive. And so essentially what CPO is and basically how it differs of what they're doing now is right now, all these optical component suppliers, one of their biggest product lines and revenue generators are these pluggable optical modules. So think about essentially a USB port that we would plug into the side of our computer, and it's a disk drive and we could add all of our things. Well, they're essentially a very similar thing where on one end, you're plugging into the rack, and then the other end's connected to an optical fiber where then you're sending data from one rack or one server to the switch and etc. Well, as hot as bandwidth, the amount of data that's being consumed in these systems has increased. transceivers has proven that it's not as economical, or it's just not even possible with these type of transceiver type of method. So co-packaged optics is something that isn't new. It didn't come out today or last week. It started to get, I think, more talked about probably 8 or 10 years ago, and it never really got much steam until late last year, which I'll get to. But co-packaged optics, basically what it does is you're bringing the optical type of technology into the switch chip, essentially. So you're getting away from the pluggable transceivers, and you're still using a lot of the same optical components, which these component players sell, but it isn't as expensive. For example, there's a really key part called a digital signal processor, DSP, which is in all transceivers. That's 30% of the bill of materials of a transceiver. That's no longer needed in co-packaged optics. And so essentially you're putting the optical net engine next to the switch chip. And so it's just shrinking that distance. And whenever you shrink the distance that data has to flow, it can just become more efficient. And the fact that you're using less power to do it is just more cost effective. And so the big scare in co-packaged optics is that if the industry goes this way and you don't need pluggables, that's a massive revenue hit for the optical component players. Now, this reality isn't coming anytime soon. So if you own these optical stocks, you don't need to go sell them today. There's still going to be a need for optical pluggables. We're thinking more because right now we're going from 400G to 800G, and now we're starting to talk to go to 1.6T type of bandwidth speeds. We think 1.6, that's why the industry is starting to talk about it more. We think maybe once we get to 3.2 terabytes type of bandwidth type of infrastructure that will be needed, that's when CPO will be much more integrated. Now, what I think shocked the industry was, or not shocked, I think people were more anticipated it, is at the end of last year, TSMC, which is a huge semiconductor manufacturer that manufactures chips for all the big players in the world, the NVIDIAs, the Apples, the AMDs, they basically came out and said, hey, we've introduced this new way to package co-packaged optics, and we're partnering with Broadcom and NVIDIA and plan to be shipping units in the second half of this year. We were like, holy crap, we weren't even thinking of this was a time anytime soon. And then at GTC last week, for the first time ever, NVIDIA introduced their first CPO product, which is going to be their Spectrum X switch. Now, they have future products coming. I think the fact that now this is going to be introduced probably is putting I think it's going to be a much more common topic on earnings calls. And it's just something that we need to monitor. But how I would view it, and as we kind of talk about players, there's specific discrete components, whether it's the lasers, the photodetectors that go into co-packaged optics that leaders like Lumentum sell. So there's still going to be an opportunity there, but you just got to be aware of, okay, how does this going to impact the transceiver market, the traditional pluggable market?
Gotcha. Okay. Now, this is a good transition because I did want to talk about some individual stocks. People who have been listening to the show, we do keep a portfolio where we track different AI investing ideas. So we have Fabrinet, Coherent, Lumentum, and Ciena as kind of stocks that you've touched on today in that basket. So I was just wondering, we don't need a deep dive on all these companies. I know we've only got so much time, but what your opinion would be on some of these companies. If someone has these in their portfolio because, they've been betting on the growth of AI, how do you see the position for each of these companies? And once you finish that, I would also be curious if you hear those names, if there's any stocks that you feel like would be worthy of more research for listeners today.
Yeah. So I'll go from what I think is like the less risky to the most risky, but also that would mean kind of least amount of upside, most upside. Yep. One company that I love, and I've been following this name for the last 10 years is Fabrinet. Mm-hmm. It's such a simple business model. Now, they aren't selling individual optical components like your Lumentums, Coherents, AOIs. They're just a manufacturing partner. But going back to the comment where this cyclical and you can't own these stocks for the long term, Fabrinet is the one exception. So if you want exposure to this space and just throw money at it and play it, but wait 10 years, there's a very good chance that Fabrinet continues to kind of go up and to the right. And the reason why is they are more well diversified in several markets. They're just not purely exposed to the data center optical market. They have good exposure to the telecom optical market. They have exposure to kind of the other industrial, whether it's automotive, medical. And so I'd say it's the safest, kind of more well diversified way to play the space. And the reason why you got to also love them. So NVIDIA is a 35% customer of them. The only concern with that, though, is, and kind of chatter is, it's going back to this debundling strategy, is they were a 35% customer because they were integrating all their optics into their systems. If they don't, or if this debundling strategy continues, people are worried that NVIDIA might see their portion of revenues kind of go down. I don't think that's the case. I think they're still going to be a very, very good customer. But what I think might also happen, though, is going back to the Fabrinet Amazon deal, like they're starting to get these other hyperscalers as customers. So I think Fabrinet is very well known as a leading manufacturer in the optical space, and I think it's a great way to play it, especially on the safer side. Next one, Coherent. They're more focused on kind of selling the optical components. They're probably the biggest optical component player in the space. Again, like Fabrinet, they're more diversified. They're not just pure optics. They have a very big laser business, and also sell to other industrials. I would say if we're running a race, they seem like they are definitely one of the leaders in kind of the higher bandwidth optics. They've already qualified and are shipping 1.6T pluggables to hyperscalers, where listening to the earnings calls of the other players, they haven't got there yet. So I do think Coherent is definitely a leader. And the thing about optics that is important is timing is critical, because these pluggable transceivers, they get commoditized over time. Right now we're talking about 800G and 1.6T. The 100G optical components that people are still buying, those are commoditized. And so margins come down, they're not as great. But when you can get to market first with these, you can charge a higher price, better margins, better profitability. And that's where you get that kind of earnings power on that earnings multiple. My probably favorite way to play it, where I see probably the most near-term upside given the pullback, is Lumentum. I think they are very well exposed. Now, they are a pure play optical name. They do have a laser business where it is kind of struggling currently, but the majority of their revenues is in the datacom and telecom optical space. The thing about Lumentum, which is unique, and I'm wondering if this word might start getting incorporated, but it's people love to use the word supercycle, where historically these two markets, going back to the end customers, where you have datacom and telecom, typically when datacom's up, the telco providers might be kind of on the decline, and then vice versa. But every so often you get a period of time where they're both going up, a supercycle. And where I think why this is the case is on their datacom side of it, they are selling the typical stuff to the data centers, hyperscalers. But on the telco side of it, you got kind of two things that are improving. Number one, the telco customers, they really paused. They went through a huge type of inventory digest in the last 2 years post-COVID. They bought up a bunch of inventory thinking that they probably couldn't get enough. And so they were overbuying. Well, they had to kind of go through that. That's over. So I think you're going to start getting the telco type of providers buying again, because they need to get these high bandwidth AI applications to the end customers as well. Mm-hmm. But what's really unique is in the telco market, even though the optical systems that are used to transport across metro networks, long haul, that historically has been telco, the data center customers are now starting to utilize that technology, because they have a data center that's in Washington and a data center that's in Virginia, for just example. And so they're going to start needing to use what's traditional labeled as telco optics, I think, in more data center applications. And so Lumentum, very well diverse in both of these. And they're also a leader in 200G EML lasers. This is very technical, don't need to get into it, but 200G lasers is a key component for us to get to 800G 1.6T pluggable transceivers, because going back to just the fundamentals of optics is it's transfer of light. It's used by a laser beam that transfers it. And in order to go higher, you need higher power lasers that can send more bandwidth through. If you listen to any of these optical earnings calls, they love to ask about what's the biggest bottleneck. It's these companies can't make enough 200G lasers. And so Lumentum is definitely going to be supply constraint for a while, which is great for them because they're just shipping, recognizing revenue, everything that they can put out, and it's great margins. They're going to see margins be accretive. So that's a name that I think is very well positioned, especially given the pullback that it's seen. And then I would say probably the most risky name is Applied Opto, AAOI. They're a pure optical transceiver or a pure datacom play. They do have kind of a cable fiber portion of the business, which I won't get into now. Now, they seem to be a little bit behind everyone where they are just qualifying 800G, where Lumentum, Fabrinet, Coherent have been shipping 800G, and now they're talking about 1.6T. But they also entered into a warrant agreement with Amazon. And so it just makes me think like there's going to be so much demand for these products that it's definitely a more riskier play, but with a lot of upside. Because the one thing that's not being talked about a lot right now, and I'm just curious when this will happen, because they're not nearly to those sides, but we always love to talk about the 5 hyperscalers. But I feel like there could be a wave of new hyperscalers that are going to need to be building these data centers. And it's like the OpenAIs, the Anthropics. OpenAI already publicly said that they plan to build 10 of their data centers. And I think like you're going to get these new wave of companies that are going to need these advanced components and infrastructures to be built out. And AOI could be a great type of customer for them. And so that's how I follow it. I know you mentioned Ciena. Ciena's on the system side of it. They're kind of in the middle of kind of the supply chain. I don't follow them as closely, but I know they are definitely well probably positioned if this optical networking infrastructure play is intact, given that they supply the actual systems to these providers.
Well, I appreciate that you bring up the concept of risk reward, because we generally, I think the optics plays have been about 10% of what we've been buying, and we've been positioning as a generally riskier, but the upsides there is if we see kind of this AI boom play out beyond consensus. So I think that contextualizes it very well for anyone who have purchased these stocks. Last thing I want to ask, and I appreciate all your time. I think you've covered everything very well for someone, even if they don't have a lot of understanding. It's been very easy to follow relative to a difficult space. I didn't expect a Harry Potter reference, but you got that one as well. I in your blog, you cover optics, but you also cover a broader array of companies and themes. So I was wondering, we are a podcast looking for all the opportunities across the AI space. Are there any markets that you cover that maybe, we haven't given proper due diligence to or recommendations that you think I should cover and more on the show and listeners should be following more? Is there anything that's really exciting to you right now beyond optics?
Yeah, I would say like AI is going to disrupt so many industries, but I do think in my space specifically, there's going to be a lot more disruption. And I think it's really kind of 3 markets I'm really excited about. One is robotics. I think like the biggest thing with robotics that you're seeing is when you think of like these industrial robotics, they're in caged environments. They move very, very quickly. But I think what's going to be the next wave, and it's been going on, it's called collaborative robots. So it's essentially being able to, a robot could be sitting right next to me and on an assembly line putting things together. I think with the ability for machines now to understand, compute, get closer to that GAI, can't speak it. I think that is going to be critical for increased robotics adoption. And kind of to piggyback off that, I'm a big fan of drones. I follow the space very specific or very closely. The drone space is going to have massive disruption. One, because there is legislation that's already been passed and going to be passed that's basically going to ban a lot of foreign drones to be operating in U.S. airspace. And so that's going to create a massive opportunity for U.S.-based drone companies. And the biggest kind of issue with drones, though, today is, and it's fair, the FAA is so concerned about these drones flying beyond visual line of sight. Obvious reasons, like you don't want a drone to crash into a plane, etc. Again, going back to with robotics, I think with having AI computational abilities on the drone, and some of these companies have already, for example, partnered with Palantir, who's going to integrate that technology onto the drone. I think you're going to see drones be more adopted in those type of beyond visual line of sight applications, which is kind of like the holy grail in this industry. So then you can get the package delivery type of application. So one day you might see an Amazon dropping a package on your door. And then lastly, and this is a space that I've covered very closely for the last 10 years, it's 3D printing, or also known as additive manufacturing. Today, the majority of it is still used for prototyping applications, I would say. But the biggest bottleneck in additive manufacturing is, number one, like, okay, obviously it makes sense to 3D print a part if you can, but how do I get that part? And how do I know that when I send it to the computer, it's going to 3D print the correct way. There's companies out there that are doing some really cool stuff on kind of using AI in CAD designs and developing these parts. And so I think you're going to see AI be a big disruptor for additive manufacturing. Would be kind of my third biggest industry of what I'm most excited about.
Sounds good. And I should note, when we look at your blog, Industrial Tech Stock Analyst, or I should say service, we've got advanced materials, drones, digital manufacturing, industrial IoT with companies like Impinj, machine vision, optical networking, warehouse automation. So you're covering a very broad group of industries that could be really impacted by AI. If you won't mind as well, as I noted at the beginning, we'll put a link to your service below. If you want to just talk a minute about what you're covering and what people would discover inside your service if they were interested more in not only optics, but some of these other themes.
Yeah. So with our publication, with our research, I take a very similar sell-side approach, meaning we're covering these a select name or specifically a select names of industrial tech companies from advanced manufacturing, robots, drones, where we're doing industry deep dives on these spaces. We're doing individual company deep dives and also including kind of detailed 5-year financial models, price targets, just to help our users who aren't interested in this space, one, just kind of stay up to speed on kind of what's going on with these companies because they change so quickly, but also trying to hopefully give them some unique insights. It's kind of probably our biggest value add. Anyone can go out and write a bullish thesis on XYZ company, but we try and add some real proprietary data points to our research, whether it's conducting channel checks. For example, within our additive manufacturing space, we do a really great quarterly survey where I talk to 30 of the biggest resellers of 3D printing each quarter, and we can get real market-driven insights that will affect the biggest names in the space. So that's probably our value add there. We're not just trying to talk. We're trying to put actionable insights with proprietary data with our research that covers what we believe is the fastest growing industries in industrial tech, which includes robotics, drones, optical networking, warehouse automation. And that coverage is growing every day. We have a lot of big plans for 2025, going to be launching on several new companies, hopefully a couple new industries. So would really appreciate if you guys would follow. It is free to subscribe. There is a premium version, which I appreciate Eric being a premium subscriber to, where you get those more in-depth insights. But if you just want to get your feet wet, there's a lot of great free content on there as well.
All right. Sounds good, Austin. Have we covered everything? Is there anything you are dying to note that I didn't get to today? I just wanted to give you one final opportunity.
I'll just use this as a proceed with caution. I don't want anyone going and putting their whole life savings in these optical stocks. But like you said, we've seen a pullback. I still think the whole AI infrastructure play is intact. I think there's upside there for a lot of the names that we talked about. So just do your research, and hopefully best is yet to come in the space.
All right, a beautiful way to end it. Thank you for your time, Austin, and happy investing, and good luck to everyone as we might have a little opportunity in the space here.
People on this show may have interest in the stocks they talk about. This is not investment advice, so don't buy or sell based solely on what you hear.